Hey, welcome to the Overnight Edge. In this episode, we are going to be discussing employer reporting of tax-free overtime for 2025 and 2026. Now, as a quick overview, tax-free overtime was created by the Big Beautiful Bill on July 4th, 2025. It made overtime tax-free. Taxpayers get a deduction of $12,500 if you're single, $25,000 if you're married, filing jointly. All right, so 2025 reporting. Employer, good news. Employer does not have to report this to the employee. So the employee's on his own, and you know what's going to happen? They're going to take out last pay stub and deduct all of it, not just a third of it. But I digress. All right, but you can be nice and report it. I'm going to show you how we've been reporting it for our clients. You can send them a separate statement, or you can report it in box 14 of the W-2. Here's a 2025 W-2. Basically, what we're going to do is we take box 14, we report the amount in other. You can use a couple codes. It doesn't matter as long as your employee knows what is being reported to them. You can use QOT. I've been using QAL-OT, or you can use TT. You can really use anything, but TT is the code for 2026. And honestly, a lot of preparers probably won't know what that means, and your employees probably won't know what it means. But the QOT or the QAL-OT, it kind of tells them what it is. It's qualified overtime. So here's an example. Employee has $12,000 of overtime during the year. Its qualified overtime is going to be $12,000 divided by 3, because you can only do the premium. That's basically 1/3 of the time and a half. So that's $4,000. Report that in box 14. There you go. QAL-OT, $4,000. Put it in there, give it to your employee, let them know what it means. You're good to go. All right, how about 2026? 2026 is going to be a lot simpler, but your employers are required to report in 2026, and you are required to use box 12 of the W-2, and code TT stands for qualified overtime. Not QO, not QT, but TT for some reason has been chosen. So here's a 2026 W-2. You're going to report it in box 12. You can see the yellow box there. TT, $4,000. That's how it works. A couple notes for you. What you want to do if you're an employer right now, for 2026 especially, make sure you separate qualified overtime out. I know a lot of software is doing it, but you have to get it to work. Do not mix with other wages. Do not mix it with bonuses. Do not mix it with holiday pay. Do not mix it with double time or overtime for, working 8 hours during a day. Qualified overtime, set it up as a different account and put it as a different item on your employee's pay stubs. That would be the best thing to do. Also, ignore the deduction limit. I know it's limited to $12,500 for a single person. That's on the tax return of the individual. You report all of the qualified overtime on the W-2, not the limit to the amount they can deduct. Software will figure that out, as I said. Not all overtime qualifies in several ways. We're going to go over the first one right now, and that is only overtime defined by the Fair Labor Standards Act qualifies as overtime for tax-free overtime. What that basically means is during a 7-day week, a consistent 7-day week established by the employer, if an employee works over 40 hours during that week, you have to pay them time and a half. That's 1.5 times their regular pay rate for those hours over 40. That's how it works. That's the overtime that qualifies. Does not include holiday premiums. If you get paid double time for holidays, you don't get that. If you get paid time and a half for holidays, you don't get that. Only over 40 hours during the work week. It does not include double time, as I said. It does not include union negotiated rates. Any negotiated rates with a union do not qualify, just the Fair Labor Standards Act hours. So you got to make that clear. A lot of accounting for 2025, folks have been tracking that all in one account, and it's making a mess for quite a few employers. All right, qualified overtime is deductible. Here's the second limit for overtime I mentioned earlier. Only the premium of the Fair Labor Standards Act overtime is deductible, and that's half of the time and a half, or you take your overtime, the amount earned on overtime earned during the year, and you divide it by 3. Okay, well, hey, if you have a question or comment, please leave it below. We'd love to hear from you. Hey, check out the playlist on our YouTube channel. Also, we got some more tax and business tips for you. Subscribe if you like. We'd love to have you aboard. Also, if you really want to dive deep and learn some stuff about taxes and also growing your business, check out our courses at overnightaccountant.com.